It's an interesting point. I quite often hear the phrase, it's a disconnect between the capital markets, the investment side, with the fundamentals. The capital markets are ahead of the fundamentals. Well, quite frankly, as investors, we should be ahead of the fundamentals. We should be forward-looking and preempting this growth before it happens. If we don't, then we're going to miss out on the opportunities. Spain is an interesting one. I mean, there has been a huge amount of capitals trying to allocate to Spain. And it's pretty early on in its economic recovery and its fundamentals recovery. But one point to bear in mind is that Spain, its fundamentals, the rental side, the economy, it did fall significantly. And so, I mean, probably a bit less so now, but if we go back a couple of years or 18 months, then the pricing of that market also was pretty attractive, given that we were kind of reaching the bottom. But pricing has moved significantly in Spain, and to your point about unemployment, I think 40% is overdoing it, but 20% or more than 20% is the unemployment rate, with youth unemployment of about 40. And that's, I mean, there is still a lot of risk. The fundamentals are still a bit shaky, but when you look at where pricing has moved, it's preempting quite a significant growth in rents coming through, and we're starting to see that already. Ireland is another good example. I mean, Ireland, according to the IPD numbers last year, returned 40%, 40%. Now, that's not driven exclusively by rental growth. Rents are driving up significantly, but a lot of it is yields coming in, and that's what our job as investors is to do, is to go into those markets ahead of the strength, so we can then benefit from that strength when it happens. But there may be an element of that gap, the disconnect between the capital market side and the fundamentals is maybe expanding a bit because there's so much competition to allocate to markets. But again, it comes down to the opportunities. Where else is that capital going to be allocated? In the bond space, there's not really good value there. Other parts of the world, actually probably more overpriced. So we do need to be careful and not let the market get ahead of itself. But I mean, fundamentally, things are improving, and we wouldn't be doing our job if we didn't preempt that improvement.
Johnny, you want to come in?
I was just going to say, I think the disconnect, you know, I agree with you. I think there isn't particularly a disconnect between the capital side and the market. And the disconnect is perhaps the difference between, you know, the cities and the regions. And if you look at those two countries, you look at Ireland, and the market is Dublin. That's it. And if you look at Spain, the market is Madrid and Barcelona and a few others, but the majority of the entire market is in those two cities. And, you know, we've had very strong performance in all three of those markets in the past, you know, 18 months. But if you look at, you know, I read this morning that Spain has 3.5 million vacant homes. You know, the disconnect is actually in the wider Spanish market. And, you know, the capital is very limited in what it will allocate to. And I think that's where we have the issue.